Kitco Mining's special coverage of Gold Forum Americas is brought to you by Metalla Royalty.
Is Barrick Gold the sleeper stock for the next gold cycle? This is Paul Harris for Kitco Mining at the 2024 Gold Forum Americas from Colorado Springs. Joining me to discuss this is Mark Bristow, President and CEO of Barrick Gold. Mark, welcome back to Kitco.
Hello, Paul. Great to be here.
Well, I really appreciate your time. Barrick has been a bit of a sleeper stock in recent years, but its performance is starting to improve as your focus on organic growth starts to mature and produce results. Your earnings increased in the June quarter, and you say better days ahead next year, being a big year with production set to expand at Gold Rush in Nevada, and also from Pueblo Viejo, your expansion there in Dominican Republic, nearing completion. This should reverse a multi-year production slide for the company. What are some of the key highlights for you coming next year?
So I think it's what's coming not next year, but next year and into the future. You know, when we put the companies together back in 2019 and then formed the Nevada joint venture, there were a lot of distressed assets. They're high quality but distressed. Barrick was working to survive, and Newmont had pretty much given up on their investments in Nevada. And putting those two together created something new. And what's exciting about just this last while is us being able to share with the market those new emerging high quality tier one opportunities just in Nevada. And then of course Lumwana, we spoke about last week at our webinar, is now moving away from being the copper mine that was overpaid for and couldn't work to joining the top 25 copper producers in the world. And as we go into expanding that operation, and that's a 30-year life of mine. PV you touched on is 20 years, a world-class mine, 800,000 plus ounces for 20 years. Tanzania is probably our best investment. We've really unlocked value there, not only for our own shareholders, but for the Tanzanian people and government. Kibali keeps rocking and rolling, and Lula is a world-class asset. It's got its challenges, but we'll get through those as we've done in the past. And then we've got the big Reko Diq project, which is as much a gold mine as a copper mine, and that's a very exciting new frontier in mining. And as you know, Barrick, and before that Randgold, has always been a pioneer. Both companies, going back in their history, have pioneered many things, and it's exciting to take Barrick back to those pioneering days.
I want to talk more about the pioneering in a moment, but it does seem your long-term organic growth plan is coming to fruition, but there's been some long and hard and frustrating years for Barrick Gold investors, as I'm sure you'd agree. In a market where many investors have short attention spans, has it been difficult to talk to the investment community about the long-term growth plan of Barrick Gold? And if you have some patience, the rewards will come.
So, Paul, I've never found it difficult to talk to investors. I've been in this business for a long time. And sure, there was a challenging time for Barrick pre-2019, and some investors that were in there at the peak of the historic Barrick share price certainly had reason to be unhappy. At the same time, remember, there are another set of investors, which are the Randgold investors, who came in at a healthy premium to the underlying value in Randgold in the transaction, and they've seen their investment double since the announcement back at this conference in 2018. And so, sure, on a relative basis, moving forward from that moment where we committed to put everything together, there's been a significant lift up in the share price. Is there more to come? Absolutely. Embedded in Barrick is real optionality, and optionality drives the premier traditionally in the mining industry. And I think the gold opportunities are driven by the gold price. The copper opportunities, which are equally important in building out this new Barrick, it's a great time to be investing in copper because, we've got this bumpy ride ahead of us as the global economy tries to find its place again. And so I think we'll be bringing new copper into the market when the demand side really starts picking up.
The gold space is a very competitive space, and Newmont's market capitalization is now almost twice that of Barrick Gold. Has that been difficult to experience, and how far do you think you are from making Barrick Gold the go-to gold stock again?
So market cap is not a measure of value. So if you issue enough shares, you'll clearly increase your market cap. It's the underlying inherent value that you can deliver in a sustainable way, and that's always been my focus, and that remains my focus. And I absolutely believe that Barrick, within its peer group, is a standout business. It's got a very strong balance sheet, the strongest balance sheet in the senior gold place. It's delivered more than $5 billion back to its shareholders, and essentially it has no debt because it's offset that, so its debt's reduced by over $3.5 billion. So inherently in all that, we've been able to create real value, and we've invested more than $9 billion in fixing the business to match it to the quality of the assets. And we still have the same reserve base as we had in 2019 because we've replaced all the gold we've mined with at least the same, if not better, quality assets. And with the expansion of Lumwana and the banking of the feasibility study and Reko Diq, we have an additional reserves coming into our portfolio. So, this is a long game, Paul, and I've been there before, and I'm super excited about being able to create value. And it's not about today. It's about today, tomorrow, and in 20 years' time. That's what we focus on, sustainable profitability.
Okay. Now, with the gold price touching $2,600 per ounce last week, better days are certainly coming for the gold sector and the gold equities. What will the high gold price do for Barrick's performance? How will that impact your capital allocation strategy? You return to shareholders, paying off debt, investment, reinvestment in the business.
So one thing that you will find both with regards to the way I look at the mining business and my team, and in particular Graham Shuttleworth, the CFO, we're all conservative in the way we manage our capital. We like strong balance sheets. We've always had strong balance sheets. And we have a very clear capital allocation policy, which we've shared with the market, just as we did in Randgold Resources. And that keeps everyone focused on sustainably profitable businesses. And so, you're going to see, and we've been disciplined. We've got a big capital schedule ahead of us. At the same time, we still see opportunities to continue to grow and deliver better value to our shareholders, and more importantly, not only our shareholders, our stakeholders. So our host countries, the people that work at our organization, and the service providers, the local business people that are partners to us wherever we operate, whether it's in Nevada or Kibali. So that's really what our focus is. And so capital allocation is when we have net positive cash on the balance sheet, we will use it either to buy shares or to distribute performance dividends, so dividends in addition to our base dividend. We don't change our mind with changing circumstances. We're very disciplined about that. And the exciting thing is we've got real organic growth. We haven't, even in the original deal in 2019, we haven't issued a single share at a premium, buying something at a premium correction. And so we did all our deals at market, and we've got that value inherent in our stock price still there, and we've got organic growth. So we've unlocked real value without having to buy it at a significant premium. And so higher gold prices help us get over this hurdle. And remember, gold prices go up and down, not necessarily in that order. And it's about, can we survive the cyclicality of our industry and still deliver value to all our stakeholders? And definitely Barrick is on track to do that.
I've had some conversations with different investment groups, and given that most people think we're in an environment where the gold price is going to continue to increase, the argument being put forward is that investors invest in gold companies because they want exposure to the gold price and gold price appreciation. That being the case, should gold companies hold gold on their balance sheets instead of cash? And I want to give an example here to reiterate the point. Barrick Gold has held about $5 billion in cash on your balance sheet for the past 2 years. 2 years ago, the gold price was $1,800 per ounce, which was equivalent of, let's say, 2.8 million ounces. Today, that gold would be worth 6.9 billion ounces, almost 40% more. That being the case, why do you think gold companies do not hold gold instead of cash?
So our job is to produce gold and sell it to those people who want to own it. And an integral part of that model is that we need to refine more and replace the gold that we mine. And so gold in the ground is our vault, and quality gold in the ground. So, Barrick today is a standout in the industry, as Randgold was, because over the last 5 years, we've replaced 44 million ounces through the drill bit, not buying it at a premium. And you work out the value of that. And we've distributed what I've just explained, invested in our business, distributed to our shareholders. And if you take our impact on the economies of the countries that we're invested in, it's many multiples more of that value that I've just shared with you. And so, that's what's missing in our industry today, is we're not finding new gold mines. In fact, since the 2000s, turn of the century, the gold industry has not replaced the gold it's mined. And it's relied on a rising gold price to deliver more gold to mine. And so, sure, if you don't have any gold, you can play with the gold in your vault. But Barrick is a industry leader in its ability to replace the gold that it's mined and grow it. And to my point earlier, with our new organic growth projects, we're going to be increasing our gold in the ground, which is inherently more valuable than a few ounces of gold sitting in a vault.
Okay. Now, you've been very conservative with your reserve price of gold. I think it's $1,300 per ounce. With gold considerably higher than that, and most analysts believing it's going to be there high levels for much, much longer into the future. At what point does the industry look again at its reserve price and perhaps increase that? I know your comments in the past about cut-off grades and things of that nature, but is there a need to increase the reserve price to better reflect the reality of the gold sector today and going forward, the gold price today and going forward?
So if you recall, and you were around back in 2010, when the gold price started moving materially and went through the $1,000 mark for the first time, everyone chased it, and we didn't. We had just built out. This is Randgold days now. We had built Gonkoto and Tongon, and we just had acquired Kibali, and the gold price was on a trajectory. Everyone was updating and using higher and higher gold prices, and I decided to stay at $1,000 because there was no change in input costs. And that's really a fundamental in that, because you can raise the gold price, but what it does is often takes you outside your ore body and really dilutes the value of your asset, which I've just talked about, your asset in the ground. So that was $1,000 in 2010. 14 years later, we're at 1,300. as you know, we've experienced a big step up in costs, input costs. So, it's logic to anticipate that we'll be using a slightly higher gold price on designing our mines and allocating our primary capital. But it's not going to be more than $1,400. And so and what that does is it effectively respects our ore body boundaries. Because if you use a gold price that goes beyond your ore body boundaries, then the risk is you dilute your feed grade. That means you got to spend more capital to expand your processing facilities to produce the same amount of gold. That doesn't make a lot of sense. And on top of that, when you look at and we use a $1,700 gold price for resources. And the reason we do that is we want to keep our infrastructure away from potentially mineable gold around our ore bodies. But that's our focus. When we come to mine it, so say we've got a block of ground that passes the $1,300 filter. Once you develop to that block of ground, there might well be other gold resources that make money at 2,600 or 2,220, and we take it. So the point is that our inherent value, going back to our point about why don't you store it in your vault, we want that the quality of our asset in the ground is fundamental to our long-term viability. That's the way I look at our business.
Okay. Now, in terms of the gold sector, the gold business as a whole, higher prices, we're starting to see some more interesting M&A happen. And people I've spoken with think that's only going to accelerate as the high gold prices continue into the future. You came close to buying Great Bear. Any regrets there?
No. We're very clear about our filter. So, I think the point here is that there are opportunities. I would just remind you that the gold price does go down as well as it go up. So, if you want to be sustainable in the long term, you need to be disciplined in the way you allocate capital. And I think the industry at the moment, because of exactly what I mentioned, we haven't replaced the ounces we mined. There's a lot of M&A that's happened through necessity. That's survival. And and certainly to your comment earlier, we don't. There's no reference in our DNA which looks too big for the sake of being big. We would like big profits, of course, big cash flow. Those are the bigs that we really look forward to.
Now, as the sector, as the gold price increases, there seems to be more and more single asset developers taking the step to go into production with, some successfully, others less so. And so is there the need for consolidation? Is that getting more urgent again?
So I think we're seeing, I say this often, there's a lot of similarities between where we are today than as the period between 2011 and 2015. And remember, when you see a gold price rise like this, and now people are making decisions using a higher gold price, imputing production in 6, 7, 8, 9 years ahead, but no one's worrying about the input cost inflation, and that happens. That sets you up for failure. And we saw that in 2015 when you had a small correction in the gold price, and by the way, in copper and a whole lot of other of the metals, and the entire industry wrote off tens and tens of billions of dollars, and in fact it was like half the value of the mining industry, and never really recovered that value. They've had to reinvest and wait for even higher commodity prices to get us back there. And what's again the point we made is, if you go back just to 2022. The equity values were much higher then than they are today, despite the gold price. So we as an industry, including Barrick, have work to do to really get investors back into their equities, because right now the investors have been buying the physical.
A couple of people I've interviewed have talked about PTSD, post-traumatic stress disorder. The investors are suffering from that period of time we've just been talking about, Mark. How can you, Barrick Gold, how can the gold sector in general recover the trust, rebuild the trust with investors to get them deploying their capital in the sector again?
So, as you know, that was really the period that Randgold Resources came into its own. It had 13 years of increasing dividends all the way to the 2017 before the merger with Barrick, and despite the gold price going up and down. So it's a very real example of what can happen if you stay the course, and we are allocating everyday capital for the long term. Sometimes we don't always match the reserves with that capital over the long term because the market demands instant gratification, and it becomes its own enemy. And so you have to be quite resolute to get through that expectation. And there's some very good examples of what keeping the eye on the horizon delivers in value. Randgold is a great example. Another example I use often is Freeport, when it went through very tough times as it transitioned to underground, and everyone was punishing it. But look where it is today. And so there's another example of a management team that was resolved on and understood the value of what it was doing and stuck to its knitting and delivered something of value. And there are numerous examples of that, but not as many examples as we have in the short term. And unfortunately, as you know, the market really reflects on those incidents rather than those success stories in our industry.
Okay, I want to return to one of your previous comments. You talked about sort of Barrick being a pioneer and has been a pioneer in the past. Now, in that, I think you share certain things with Robert Friedland. He's obviously pioneered things in the development of copper projects in the DRC. Some investors don't mind that. Some investors are quite uncomfortable with those sort of pioneering jurisdictions. Do you think there's perhaps something broken in the Western investment model, that investors turn their nose up at really good opportunities because they're perhaps unfamiliar with, or they find certain jurisdictions distasteful?
Well, absolutely. And Paul, we talk glibly about the importance of a better world for future generations. And we keep migrating back to our comfort places in the developed world, which, by the way, has got many challenges itself, and today is highly indebted. And one of the big reasons where the gold price is today is because how do you protect your wealth? And we've seen that. And so, for us to build a better world, we can make sure that all the cars in California have batteries. That's not going to save this planet. What's going to save this planet is lifting people out of poverty. And I've said this many times. And there's no better engine and industry than the mining industry to uplift people out of poverty. It drags infrastructure. You talk about Robert Friedland, and you look at what that investment has done in the DRC. And now it's the rail link through to Angola. And Barrick has got many examples, even in Nevada, on how it changed the northern part of Nevada. And of course, Randgold has got a whole lot more around the world. And so we have, and I think, if you look at some of the Chinese companies and mining companies that have changed and taken on more risk, supported by their own government, I think the Western world can learn a lot from that. Looking to invest in working with host countries to make those countries investable. And there's no better example than Pakistan at the moment. That's a great, it's going to be the biggest private investment ever into Pakistan. And it's supported by Western governments. and what it's positioning to be is an absolute pioneer in a completely new metalliferous belt, challenging the famous Andes copper belts.
I don't think anybody would argue against that the mineral endowment there, the mineralogical potential is significant, and as you say, comparable, maybe even in the course of time, better than what is in the Andes. But the situation on the ground is very different as well. This past month, the Baloch Liberation Army has been an organization that seeks independence for Balochistan, where Reko Diq is located. They've been stepping up their activities. In other parts of the world, liberation, independence movements have targeted natural resource projects as a means to get their message across. Isn't it possible that Reko Diq could become a focal point for such political activity?
I think that's a good question, and it all goes down to your license to operate. And we've just started employing in some numbers now in Reko Diq, and we're very committed, as we did in Kibali. And remember, Kibali was a war zone when we first started out there. And I would take you back to Escondida and Chile. You know that region very well. And so, and look at how these countries have been transformed. Without copper and copper mining, Chile wouldn't be where it is today. And it's had its challenges even just a couple of years ago. But look where it's re-landed on the recognition that that's the biggest single driver of that economy. It's just, how do you share it? And I think if there was a fault in Chile, it was the recognition that there was a two-tier society or multi-tier society, and that some of the Chileans people didn't benefit from the riches of the mining industry. And so that gets back to my point about, it's terribly important to recognize that as miners, we are custodians of national assets, and we mine them, and the beneficiaries should not only be our shareholders. Of course, they are important, putting up the risk capital, but equally important are the people of that country, both in the form of the government that they've elected, and actually the communities and businesses around the mines and across the nation that should benefit. And it goes for Nevada. One of the things that we brought back to Nevada was, during COVID, is that we invested in local business, small business. We recognized and encouraged our suppliers and service providers back into that local economy, and the benefits of that have been outstanding.
You've laid off some of the risk of Reko Diq by partnering with the government of Pakistan and the government of Balochistan. Do you intend to sort of potentially lay off more risk there, potentially getting the Chinese involved, potentially getting your partners in Saudi Arabia involved? Countries that have perhaps more of a better cultural affinity or understanding with what's going on the ground in that country. So,
Barrick's very happy with its 50%. We spend a lot of time making money for our partners, whether it's in Nevada or elsewhere. And so 50% is a good number. We take on the responsibility of managing that operation, making sure the skills are there, every intention into the future. Like all our other operations, we want to see senior executives in country being of Balochistan descent, and likewise from the greater Pakistan nation. And already we have Balochi professionals, which we've selected the creme de la creme out of the education system in both Balochistan and Pakistan, but they're Baloch in their heritage. And they're working in our mines as part of their development. Some of them will go back to some of the Ivy League schools around the world, and they will come back as the middle management of Reko Diq and ultimately be a leader, have leadership positions in that mine. So we are investing as we did in Kibali, as we did in Lulo, as we've done now. 87% of all the management in Nevada is now Americans. So, that's the important part, and because you've got to be able to manage the culture and, to your point, to recognize and be able to live as a corporate citizen within the society. And so, I'm very positive that we'll get that right. And remember, and of course, your reference to Saudi is, Pakistan is 25% and Baluch is a carried 25%. That's the key, because there has never been an investment where 25% has been fully funded and sits with the local indigenous population. So the value that's going to bring is enormous. And this is just the first step in an extremely endowed region. So future projects are going to come. Barrick has already invested in some of those future projects, early stage. And to your point, we'll be attracting and working with our partners that you mentioned, going forward. But Reko Diq is pretty well defined to get to the first copper production in 2028, which is not far away.
You've got a lot of moving parts in Barrick Gold. What will Barrick Gold look like by the end of this decade?
Well, I think Barrick Gold by 2028 is going to be what we envisaged it to be in 2019, and that is a world-class gold and copper mining and exploration company, and definitely led and managed by a dominant presence of our host country nationals, and that's the model. By the end of this decade, we expect to be 30% better as far as our production profile on a gold equivalent basis. The impact on profitability is absolutely our focus, and that's going to come long before that.
Will that be the point in time, Mark, where you choose to hang up your geology hanger and do something else?
Yeah, that's been a market speculation. Some journalists have sort of made it up as we go, but I'm on record by saying that I've assured the shareholders that I'm committed to seeing the 2028 commissioning to fruition. That really, for me, is the outside end of my commitment to Barrick. We've got a great succession plan. We've got some great people, and I can't ever say that's the I'm saying that's the outside point. Could it happen earlier? Of course, because things change and companies are companies, and you can never predict what's going to happen. But that's my commitment, and I intend to uphold that commitment all the time. I'm making a meaningful contribution to this company, of course.
Well, you've got a lot of milestones to come, so look forward to catching up with you again several times in the next year and as quarters progress.
Thank you, Paul.
Mark Bristow, thank you very much for joining us.
Thank you very much. Yeah, always a pleasure.
And we have a lot more to come from the 2024 Gold Forum Americas in Colorado Springs, so hit that subscribe button and see all of our videos. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining's special coverage of Gold Forum Americas is brought to you by Metalla Royalty.